This market is fascinating. In the short term, there is a lot of noise. Some altcoins are going up, others are going down. This is true for the daily, the weekly, and the monthly performance. Once we zoom out for 1 year, there are only very few winners. Check out the performance in the last year based on market cap. It was only the largest market caps, 1 to 200, that were able to make money on average. The rest all lost. Now this video is about Bittensor again. There was already a video published 2 weeks ago. And just yesterday, we had another mention of Bittensor TAO by Jason Calacanis on the All In podcast. So he's got an investment in the project and he's trying to push the token. Now, I don't believe in marketing hype. I don't believe in narratives. I believe in numbers. In that prior video on this channel, it discussed a trading approach that historically worked very well for Bittensor. It's the golden and death crosses between the 15 and the 6-day simple moving average. The takeaway of the video was that I was waiting for the death cross to occur to bet on falling prices. That death cross did occur. That was on the 4th of April. Since then, we have sold off aggressively. That's the performance, by the way, of that backtest. A very consistent moneymaker. Buying and holding Bittensor over the time period even gave a negative return of minus 13%. But the moving average strategy returned almost 600% at a lower drawdown with a much shorter drawdown duration. One of the major reasons why the strategy works is because even though the win rate isn't necessarily that high, the winners are much larger than the losers. Here's another chart from that video. It's the Bittensor token relative to the altcoin market cap. Here is the updated version of that. And so this gives us an idea of how much more potential downside there might be. History is any indication. TAO could easily drop another 40% from here relative to the rest of the altcoin market. Now, one of the reasons for this long-term underperformance is the token inflation. So more and more TAO tokens hit the market over time. And if the demand doesn't grow as quickly as supply, then of course the token tends to not do as well. But really on the short term, it's leverage that moves the price. On the spot market, in the last 24 hours, we only had around 100 million worth of trading volume on the top exchange. Compare this with the perpetual futures market. Here we had 1.2 billion worth of trading volume. So 12 times the trading volume. Really, the bets on the price make the price discovery. And so with that recent dump of TAO, we saw a lot of liquidations of those levered bets on the price. 9 million worth of bets got wiped out. And that happened under record high trading volume. But something is different this time. With prior liquidation events, we tended to see short squeezes. So the funding rate was very negative. Many people were betting on falling prices. So the price continued to go up. This time, the funding rate gets slightly negative after a price dump. So that's simply the long holders losing their shirt and only the shorts being left. So that's the long traders, the people betting on rising prices, losing their shirt. The short traders, the people that bet on falling prices, staying in the market. That's why we see the red financing rate here. There's more shorts than longs. Something that's very uncommon though is that the open interest with that decline went up. Usually there's positive correlation between open interest and the spot price. So when there's a lot of bets on the price, the spot price tends to go up. When there's less bets on the price, the spot price tends to go down. But this is not what happened with the recent sell-off. With the recent sell-off, the price went down, but open interest went up, despite all of those liquidations. So what's happening here? My impression is that the retail investors got liquidated with this price dump, and the market makers took the counter position, and that counter position increased open interest. The market is moving in the direction of maximum pain. Maximum pain for who? Maximum pain for the retail investors that take on too much leverage. First, retail investors got excited because billionaires promoted the token. Then they got wiped out. And then the market makers, they bought the dip. And so I wouldn't be surprised at all if we see a bit of a relief rally in TAO. This is TAO relative to Bitcoin. Betting on falling prices of Bittensor might now become the popular trade. And that's when market makers push up the price. But then at some point the manipulation will stop and attention will decline again. That's probably going to be how history will repeat yet one more time. Now, I'm not a fan of betting on this little rally. I think it's too dangerous. I rather support betting on the macro. My short on Bittensor is still open. I follow the backtest. The backtest is still bearish. And the backtest worked phenomenally well and it created very nice long-term returns. And while the very short term might not look that great to bet on falling prices, because market makers own the supply, I think it's always problematic betting on those micro trends. I rather have time on my side. Over time, TAO will very likely sell off again. The expanding supply has to go somewhere. If you're interested in getting access to Bitcoin strategy analytics to run backtests like this yourself, or you want to have a look at my strategies, how I trade Bitcoin, Ethereum, Solana, and various altcoins, or if you want to get the next trading alert, like here for Bittensor on April 6th, and we bet on falling prices, then feel free to check out the premium membership. The link is down below. It's thebitcoinstrategy.com. Thanks for watching. See you next time on YouTube. I publish videos regularly over here. A like would be very much appreciated as well. It helps the channel grow. Thanks and see you next time.